All right, so I'm gonna do it this way, because we're in the office, we're having our passive investor network event, but I wanted to do this prior to people getting here, so that way I kind of share with you guys. Let me take my keys out. I'd share with you guys, and then basically what I'm gonna be going over with them. So number one thing is who am I? So, my name again, if you're new, my name is Victor Bell. I've been doing real estate for about since 98 all myself. I'm not a broker, not anything like that. I've done over $59 million worth of real estate, buying and selling my own deals, creative financing, multifamily real estate, single family houses. I've done mobile home parks, retail building, a little neighborhood shopping center, a single tenant retail property, mobile home parks, vacant land. I've done CPR stuff, which is it's a condo property regime, kind of like doing a condo conversion on an apartment building, but you could do it with land, which we did in Hawaii with a partner of mine. We've done small development stuff. I've just partnered with somebody else who's great at that stuff. I'm usually the guy that negotiates the deal, finds the deal, funds the deal, puts together the financing and raises the capital, and then I partner, and then my partner brings in the capital, and then we split the money because I turn around and I do all the work. I'm the operator. So I was bringing that up to you guys to say that I've been doing this for a long time, and why I pick multifamily as the asset class. Um, so we'll do it this way. Why multifamily? Can you guys see that? Yeah. So why multifamily? Number one, because it's simple. I really like simple stuff. I like simple real estate. I like simple assets that you can easily understand. And people will always need a place to live. So, and if you've taken a look at, I've talked about this quite a bit. Rents in this country have gone up ever since 1945. Since 1945, about 8 to 9% on the average. Naturally, they went up more than that some years than others, but there's a consistency in the rents, and I truly believe we're becoming a renter nation. As long as the interest rates stay high, the tariffs continue to go on the way that they are, the inflation, which will never go away, inflation has continued on. It's went up over 86% of the dollar has lost its buying power of my lifetime. It was since 1973. So that's why I believe multifamily real estate is great because rents are continuing to go up. Inflation, interest rates, supply and demand issues. There's always going to be a supply and demand issue with lack of housing or lack of quality housing. There's a lot of houses, but not everybody wants what's there. So that's why I love that. And then if you take a look at the economic and the demographic trends in this country, you have 76 million millennials and 76 million baby boomers all doing one thing, moving towards rentals. And now we're not talking about ugly, beat up stuff. We're talking about apartments in great locations, great amenities, gyms, near shopping centers, near jobs, near hospitals, all of that stuff, as well as you know, you have Uber, you have Lyft, you have Grubhub, you have all of these things that are catering to people who actually are able to live where they want to now, right? We're talking about renters by choice. We're not talking about renters like back in the day when people didn't have money, so they had to rent because they couldn't afford to buy. That's not the case anymore. So that's the reason why. So, like I said, the economic and demographic trends in this country, as well as rent, is just becoming a normal thing. So that's why I love multifamily. It's simple. It's really simple as an asset class. The other thing, I'm gonna kind of write a couple of things down so you guys get it before we have a bunch of people coming. But the other reason why, so we have that why multifamily, which I went over, coming to Renter Nation, that's continue on to go. The millennials and the baby boomers continue to move towards this asset class for multifamily properties, people selling their homes. Um, and then the other piece is, like I said, I've been doing this for a long time. So why did I start Bell Capital, right? Why would I open this up to other people to start to raise money from my family, my friends, people that I know, business connections in San Diego on social media? So there's two reasons for that. Number one is, if you guys kind of follow me here, you guys know that you guys have been watching me for a long time. There's no shortage of money on the planet at all. So I do have choices. So the way real estate tends to work, most of these real estate deals, the ones that I'm looking at, great pieces of real estate, great properties, great locations in great cities. They all kind of have two things going. There's debt, there's the debt. That's one piece here. And then there's the equity. There's the equity. So the debt typically is done through like banks. That's the cheapest money on the planet. Even if it's expensive right now, it's the cheapest money on the planet. Can you guys still hear me? Let's see. Yeah, you guys can still hear me. So it's still the cheapest money on the planet because on the debt side, when I go to Fannie Mae or Freddie or an life insurance company to do financing for these type of properties, these bigger properties, they're going to go anywhere from 60 to 70% of the money, right? That's going to be 60 to 70% of the property right there raised, period, from here. Now, this other 30 to 40% of the equity, usually the way that these deals work in real estate, these bigger deals, these are tends to go with partners, right? It's partners or lenders. It'll be like a Goldman Sachs or a Blackstone, or Equity Residential or JP Morgan, things like that. That's where you go for here. So this tends to be partners. This is where that money's raised. All right. So typically that this happens this way. Like this is the elite, this is the wealthy. This is going to JP Morgan. This is going to Blackstone. Blackstone, I think they're at what, $11 trillion. You got BlackRock, $11 trillion. Vanguard is another one. I think Vanguard is somewhere around about the same, about $10 trillion. You have CalPERS, which is the California Pension Fund for the state, the California State Employees Pension Fund, $300 billion. So did I say $1 trillion on those? $11 trillion. Yeah, for Blackstone, BlackRock, Vanguard, things like that. $300 billion for CalPERS. Like there's so much money here. And then, because that's the wealthy, and then there's us, right? There's the Bobs, there's Tom, there's Steve, there's Kevin's, right? There's all of these other people. There's James's of the world. Like that's us, right? So rather than go to Wall Street, like a Wall Street, I figure I can go to Facebook, I can go to Instagram, I can go to YouTube, I can go to all around here in San Diego County, I can go to my friends and business connections here, and then we can do this instead of me going to Wall Street, going to Goldman Sachs or Blackstone or Equity Residential and raising money with them. I can go do it so we can finally create wealth for us, because that's really what's going on, right? So that's why I did this. I was like, you know what? I don't want to go to those guys if I don't have to. I don't want to go to the wealthy and elites. I want to make my friends and my family and your family, I want to make us wealthy. That's really what I want. All right. So that's why I opened this up to other people, because like I said, there's no shortage of money. And rather than go to these guys, rather than go to Wall Street or any of the big institutions and any banks and have them partner with me, I figured I'd go to you guys, because that's just, you guys are a lot friendlier, right? It's friendlier money. You guys are partners. You need these opportunities. They don't need any more opportunities like this. These guys aren't even working anymore. All right. So that's why I opened this up to people, like I said, because I do have choices. And I want to help my friends, my family, and all the people that I'm meeting online. I want to help us get rich and get wealthy and buy the same assets those guys buy. But I do it with you guys, right? And we partner up and then we can win. A lot more work, but I'd rather do it that way. It's just, that's a purpose that I have. I've always done it like that. It's not new. I've always raised money from family and friends and business partners. And now I'm just able to do it with more people. All right. So that's why I'm doing the way that I'm doing. So why multifamily? I love it because it's simple. It's the fastest way to build wealth to me as it relates to real estate. It's the simplest asset class because people always need a place to live. Renter market is growing. It's continuing to happen. People are always moving towards the rental market. You move somewhere, you don't buy first, right? You rent first, and then you start getting a feel for where things are. And then I wanted to share with you guys exactly why I opened up Bell Capital to other people. Why I was like, hey, why don't we just go ahead and start a fund, go to market, and I'll go and build my audience, and then I'll share the deals with my audience and have them invest with me rather than go to Wall Street or some pension fund or family office or some wealthy bank or institution. And I want to share the wealth and share the profits and make you guys money. That was my goal. All right. That was really what I wanted to share with you guys. I know people are getting ready to start coming, but I wanted to share this big piece with you because this is what I'm going to share with them so they get an understanding, and then we're going to start going through some deals. So look, if you want to invest with me or you at least have questions, you want some more information, go to bell-capital.com. You can register there that says invest now or get started. Fill out the form that is just your name, your email address, your phone number, whether you're accredited, you're not accredited. You got to be accredited to invest with us. It just means that you got to make $200,000 a year in income or you have $1 million net worth. Totally made up. It's totally bullshit. but that's just how the game is played right now. And later I will have something for non-accredited people. That's my goal. So I can help more people. But for now, that's how the fund is set up. So you can go there and do that. Or you can text info to 760-531-8500. That's 760-531-8500. Text the word info, INFO, and somebody on my team or myself, we will get back with you and we'll get you more information, answer any questions that you have about investing with us, share whatever deals that we're looking at. I'm not going to share the deals that we go over publicly, the deals that are under review, unless I know who somebody is. I don't mind sharing them at all. I want you to see exactly what we're looking at, why we're looking at it. And if you ever want to come down to our office and you want to see what we're doing, like this is our conference room where we're at Bell Capital at the headquarters, right? So you can see we're in a private jet community over here. This is our conference room, one of them. And like we have jets over here all the time. This is the stuff we see all the time. There's private jets everywhere here. Yeah, that's a fuel truck right there. But that private jet's there. One just took off. One's coming back in. This is all the time. And the people who come in here, they're families. I mean, a lot. I think the last lady who I just watched get off, she got off. She had a backpack and some flowers on her shoulder. Like you need to be around an environment where you have 40, $50 million private corporate jets flying in and out. People who are talking about money all the time. People who are doing bigger things, 40, 50, $100 million deals. The deals we look at are 80 million, 90 million, $100 million. The smallest deal we look at, somewhere around $40 million. And that's really tight. And it has to be a great property, great location. And there's not a lot of those things happening right now. But I said all that to say this. I want to help you guys. I want you guys to invest with us. Keeping your money in the bank, keeping your money in savings, keeping your money in your retirement accounts that's not growing for you. It's not going to take care of your family long term. Get your money out of those banks, out of your retirement account, and move your money into cash flowing, income producing real estate that provides cash flow, future appreciation. It provides the tax advantages for you and your family and the scale that you want, because you get into bigger assets, which does what? Protect your capital. It stops you from losing your money, like we talked about earlier. With the dollar coming down, inflation happening, man, it's tough, right? You want to stay ahead of that. That's not going away, guys. It's not. So if you can put your money in something that cash flows, pays you, protects your capital from loss and inflation, as well as you got the leverage, the scale, investing with other people into bigger properties that you wouldn't normally be able to do on your own, much less get it out of the bank and the volatility of the stock market. It's crazy. It's going to benefit you. It's going to take care. Do it for yourself. Do it for your family. I promise you it'll be worth it. All right. So yeah, let me get ready. Got people coming, but I appreciate you guys. Let me know if you need anything. Like this video, share the video, comment on the video. If you want to come to our next thing, go to bell-capital.com/RSVP. Put your name on the list there. One of us will reach out if you're here in California. If you're not here in California, you want to fly out, you want to join our passive investor network, we would love, love, love to have you. I want to meet you. I want to get to know you in person, have you invest with us. Or if not, I just want to get to know you and see how I can help. All right. You guys have a great day today. Let's get after it. Boom.